Hi everyone, Oleg Tkach here with NFM Lending, and today what I want to cover on this video is a 2-1 buy down. What is it? How does it work? Who could pay for it? How long has it been around? And pretty much everything that you need to know to decide whether or not this is something that you should consider with your next purchase. So for a lot of people, they don't realize that a 2-1 buy down is not anything new to the mortgage industry. It just hasn't been really used in recent times. Ever since I got into the mortgage industry back in 2005, the 2-1 buy down existed, and it was something that was really popular back in the 90s. Typically when rates go into the higher levels, into the 6s, 7s, 8s, and 9s, that's really when the 2-1 buy down really starts coming out and really starts having a pretty significant impact and being a tool that home buyers use to get themselves into properties. And at the same time too, it's a tool that sellers use to entice home buyers to purchase their properties. So what is a 2-1 buy down? A 2-1 buy down is a feature that is added to a loan, a 30-year fixed mortgage. So in the example that we're going to be using of 6.875, it's a 30-year fixed mortgage. The first year, the interest rate is 2% lower, which in our example would be 4.875. The second year, the interest rate is 1% lower, which in our example would be 5.875. And in the third year, it's going to be the rate that was supposed to be from day one, which is the 6.875. And that's going to be the rate from year 3 to year 30. Now, there's a couple things to note. First off, only the seller could pay for a 2-1 buy down. I repeat, only the seller could pay for it. So a buyer cannot pay for a 2-1 buy down. A real estate agent cannot pay for a 2-1 buy down, nor can the lender pay for a 2-1 buy down. It could only be financed as a seller paid closing cost. Now, another thing that you should know is that it could only be applied to primary residence purchases. It cannot be applied towards investment properties. So with all that said, what does it actually do to your monthly payment? Well, let's take a look. So over here we have a 2-1 buy down calculator, and there's a couple things that I want to mention. So first off, the payments that are shown, they're payments that are shown without taxes and insurance. This is only interest and principal, okay? At the same time too, this calculator calculates the loan amount, not the purchase price. So just keep in mind as we're going through this, this is the amount of money that you're borrowing regardless of your purchase price. So let's start with an $800,000 loan. In our example of a rate of 6.875 for an $800,000 loan, the first year payment difference is $1,021.76 lower than what their regular payment would have been. So instead of paying a total payment of $5,255, the first year payment would be $4,233, which is $1,021 lower. The second year, their payment difference would be $523 lower than the third year payment of $5,255. Now, what does the buy down cost? That's probably what a lot of people are asking right now. The answer is it costs the seller the exact amount that the payment is lower by for the first 2 years. So for example, that same $1,021, the first year payment is lower by every single month, plus the $523 that it's lower the second month. It's the exact amount that the savings out of pocket monthly, lower monthly payments that the buyer is going to pay of $18,538 is the exact cost for the seller. Now in points, meaning if you're going to be asking the seller for a percentage point towards closing costs, it would equate to 2.32 of points. Now for a $700,000 loan amount, the payment is lower by $894 for the first year, $457 for the second year, costing the seller $16,221. The third year, $600,000 loan amount, you're looking at a first year monthly payment of $3,175 interest and principal, with a payment that's lower by $766 for the first year. The second year, the payment's lower by $392, which then essentially costs the seller about $13,900. For a $500,000 loan, this will lower the monthly payment by $638 a month for the first year, $326 for the second year, and then the third year monthly payment would be $3,284. For a $400,000 purchase, it drops their payment for the first year by $510 a month, followed by the second year, it's lower by $261 a month, and then the third year, the final payment would be $2,627 for the remaining term. And then lastly, a $300,000 loan amount. The buyers receive a lowered monthly payment by $383 a month. The second year lowered monthly payment by $196 a month, and this costs the seller about $6,952. That is what a 2-1 buy down does for a buyer. Now, a lot of people are wondering, why would a seller pay for this, right? And the biggest factor that people are missing out on, the biggest opportunity in our market today, which we are definitely in a high interest rate market. Rates are at at the time of this recording at an all-time high this year. They basically entered into the 7s. And what a lot of buyers don't realize what is happening is that the higher rates are giving them the opportunity to negotiate with sellers. And so right now, you could not only negotiate sales price with sellers, but in addition to that, you could negotiate and ask the seller to cover your closing costs, cover a 2-1 buy down, and cover other items that you essentially like prepaids and taxes and insurance and all that in advance. And sellers are willing to do that because right now, with rates going up, less buyers are buying because less of them are able to buy. As rates go up higher, it prices people out of the market and essentially kills buying power, which is one of the videos recorded earlier this year, is what is the impact that rates are going to have for buyers this year as they go up. And so with that said, people are using this time to negotiate with sellers which are willing to pay for a 2-1 buy down. It's becoming very, very common with a lot of our buyers right now, which essentially gets them into a home with a lower payment for the first 2 years. Now, a lot of people are saying, well, okay, the 2 years I'm going to have a lower monthly payment, then what? Well, while no one knows what's going to happen in the future, the rates at this level most likely are not sustainable. And Fannie Mae, in fact, recently released an article where they predict that rates in 2023, at some point, they predict are going to be in the mid-4s again, which, think about this with me for a second. If right now rates are in the 7s and projected to go to the 8s and possibly 9s, before they come back down to the mid-4s, which again, this is all projections right now. No one knows for sure what's going to happen. We might see rates drop, in a few months based on some inflation data. However, at the same time, too, we might see them skyrocket into the 11s. No one really knows, but regardless, we all do know that eventually they will have to come down, whether that's a year from now, 2-3 years from now. The idea behind the 2-1 buy down is use the higher rates right now to negotiate a lower closing purchase price, to negotiate and get yourself in, and in the next 3 years, 4 years, potentially even a year, when rates do come back down, utilize that time and refinance yourself down to a lower monthly payment. That is why this program is so popular and works for a lot of people. Now, worst case scenario, let's say rates go up and stay up for a while. Well, your rate is fixed. It's not an ARM. It's not going to change in the future. You do have a fixed rate, and that's going to stay for the remaining of the term. That is why people are utilizing this program today. It's a way to get in, get yourself a temporary lower monthly payment that's paid for by the seller, not by them. And then when rates do come back down, just like they did back in 2020 and 21, when everyone refinanced and dropped their payments down by $1,000, some people, $1,500 a month, we're going to see the same thing happen again. So ultimately, if you think about it, if you're a buyer and you're thinking, do I buy now or do I wait when rates go down to 4.5 again? Well, if rates do, whenever they do come back down to 4.5, imagine how many more buyers are going to be out there searching again, while rents right now are skyrocketing because there's less buyers, more renters, rents go up. At that point, you're going to see the same thing we saw in the beginning of this year in 2022, where we had, in Washington state, people going 100, 200, sometimes 500,000, and even a couple, people win $1 million over asking price because rates were going up and because they're trying to get locked in before they went up. So with that said, that is why people are utilizing the 2-1 buy down to get in now, have a lower monthly payment, negotiate with the seller now with the plan to refinance in the future when rates return to a normal level, because now it's a buyer's market more than we've seen it be a buyer's market in the last few years. So there you have it. Hope that helps you understand what a 2-1 buy down is, whether it's right or for you or not. My team and I are here to help you guys with any pre-approvals that you guys have. If you want to explore your options, find out what you qualify for, find out if the 2-1 buy down is something you're eligible for, and us to help you with your agent purchase your next home with the 2-1 buy down. Don't hesitate to reach out to us. You can reach us at 425-478-7676, and we hope you have a good one.